Hey everyone, this is Rob Keens from goldsilverpros.com. It's Monday, February 8, 2021. I hope you guys had a great weekend. Today we're going to be talking about silver and specifically the inflows into the silver ETFs stored over in London and interesting new data from Ronan Manley about how much silver may be left and what that means if we have another silver surge like we did last week with people piling into the silver physical. Let's go ahead and get started with that. I wanted to start by highlighting how much silver we had flowing into SLV. Now, I have been on shows and conducted my own investigations as to whether I believe that SLV has all the silver they say they have. I'm going to save that topic for a different conversation because I think we've already covered it and we can give you an update on that later as well. But for right now, we're just going to assume all of the silver inflows into SLV that we see on this chart are legitimate ounces that they're able to source in the open market. And we're going to examine, if that's the case, how much free-floating silver is there left in London, and is there a chance for there being a physical silver supply crunch? I think there is, and we're going to get into the data. So we're going to look at the last 4 or 5 days of business into and out of SLV. SLV, as you know, the custodian is JP Morgan. The ounces for SLV are stored in London on that market, and we had about 110 million ounces of inflow on these 3 days, the 29th of January, the 1st of February, and the 2nd of February last week. And then we had a couple of days of outflows. Net, there's about 90 million ounces flowing in for the latest data that we have available. That's net, 90 million ounces flowing in. And I want to show you what 90 million ounces is. If we can get over, I plotted 90 million ounces. Oops, sorry, go back to it. I plotted 90 million ounces on the calculator. That comes out to about 2,800 tons. Now, I want you to remember this number as we get deeper into the conversation about how much free floating silver there is. 90 million ounces, the net that we saw into and out of SLV over about the last week is about 2,800 tons, almost 3,000 tons. Remember that number. So now we're going to go over to Nick Laird's site, Gold Charts R Us. I always credit him when I go to the site. It's such a fantastic site. I pay for this membership. This is not given to me for free. Definitely worth it. If you guys are interested in the gold and silver markets, go check out the site. I think it's about $200 a year to pay for this information. Here is all the silver inflow into various depositories, ETFs, funds, e-funds, you name it. This is about the best tracker I can find for silver movement over periods of time, not just into the SLV, which you do see here, the SLV ETF, but into all formats of fund or the COMEX depositories in which there is supposed to be physical silver backing up those positions. That's key, supposed to be backing up those positions. We're just going to take what the reported numbers are from all these funds in the COMEX at their word. We're not even going to question it in this video, and I'm going to show you where we still have a silver supply crunch, even if we believe all of the numbers. So if you look at this column right here, this 4-week change column over here next to last column, at the bottom we see 124 million ounces flowing in net of all changes to the funds and the COMEX within the last month. Okay, that's well over 3,000 tons. It's probably like 3,300 tons or something. Let's go put that number in there, 124,572. See if I can copy paste that real quick. And we're going to go back to our little Google calculator. Now remember, the 90 million ounces was about 2,800 tons. That was flowing into SLV net over the past business week. This is what has flowed into all of the funds and the COMEX over the past month, about 3,800 tons. And that doesn't include, that's inclusive of everything. And total weight of all the silver held by all of these funds and by the COMEX is 1.6 billion ounces. So that's a lot of silver, but about, I would say 8%, 7 to 8% of that flowed in just the last 4 weeks. Just the last 4 weeks. That's a ton of flow. So the question is, how much silver is available on the market? And this is the million-dollar question, because even though we have all these reported numbers, and even though you may question the numbers, just assume all these numbers are reported correctly. How do we figure out what's left? It's really tough because there could be private allocated storage, all of those types of things. But thankfully, there's analysis done constantly by one Ronan Manley, a Bullion Star. I've credited him about a bazillion times for use of his research. I'm going to do it again on February 7th. He wrote an article right here on bullionstar.com called Houston, we have a problem. 85% of silver in London already held by the ETFs. What's he talking about in ETF? He's talking about all these ETFs. Most of the ETFs hold their silver in the London vaults. So he's going to do an analysis here of what's there and what's not. And he specifically pulled out valuations around just the ETFs. And he put who owned the ETF, who is the custodian. You can see JP Morgan's involved in 1, 2, 3, 4, 5, 6, 7 of these, but you have some others as well. Oh, 8 of these, I'm sorry. But you have others as well, or at least the vaults. But JP Morgan's custodian of the SLV and the Aberdeen SIV are right here that I know of, and I don't know if they're custodian of the other, but they have vaults that hold all of this. And anyway, he went on to do this really long analysis. I'm not going to reproduce this on this video for you guys. I'm just going to say go to his site and read it, and I'll give you the URL right here. It's Bullion Star blogs run in Manly. Houston, we have a problem 85 of silver. I'll put the link down there in the description. If I forget, call me out on it, and I'll go back and do it. If you just go through all of this, he uses all sources available to figure out how much of that London silver that's stored is actually free floating available. So in other words, if we had another 3 to 4 day run on the SLV like we had here, could we withstand another run like this without bankrupting the London silver? That's the question he's trying to answer. And he goes into all of this painstaking analysis. Again, I'm not going to go through it, but he gets down to the conclusion. And then the conclusion is this, and this is the money shot here. This is what we want to pay attention to. And this is a very long article, and I've read through the whole thing and checked his numbers. If the above, here's the conclusion right here. I'm going to go ahead and read it, starting with this sentence. If the above 14 ETFs see continued investment inflows, they will all have to compete for the available silver in London, which is not already held within these ETFs. And that available silver is at an historic low, some 3,000 tons or so. Now remember, the net flows into SLV, even with these withdrawals, is 90 million ounces, which is about 2,800 tons. He's saying there's only about that much left, a couple hundred more tons, about 3,000 tons left. So if we ran on another 3 days like this, where we had 110 million ounces, that would exceed the 3,000 ounces that he says is available through his analysis. And so he goes on to say, a few more days of inflows, starting right here, like the ones seen over the 29th of January to the 2nd of February, would be a major emergency for these ETF providers, particularly the iShares SLV, because there is just not that much physical silver left in the vaults of JP Morgan, Brinks, Malka Amit, Loomis, and HSBC, which is not already reported as being in these ETFs. And let's not forget all the unallocated silver positions, which are outstanding, which are claims against the bullion banks for silver, which they have not got. Anyone with deep enough pockets can now cause a serious enough run on the remaining available silver stored in London that is not currently attributed. What's he talking about unallocated silver positions? Well, the COMEX or any unallocated fund which has a claim to silver. Remember, there's so much silver stored on the COMEX, but there's much more paper on the COMEX. So if you had a lot of people standing for delivery, that's a type of unallocated claim. Any other unallocated market within London, the US, around the world, that could potentially have a claim to any of these 3,000 tons of silver sitting in the London market. And remember, he's done all of this analysis over this article to prove out there's only about 3,000 tons left, because he pulls out the ETFs, then he looks at allocated silver held by the wealth sector, and then he goes on to look at a lot of other data, and he breaks down each of these ETFs, by the way. It's really good data. Go ahead and read that article again. I'm not going to reproduce it, but about 3,000 tons. Remember, those 90 million net ounces that were pulled out, that were put into SLV, was about 2,800 tons last week. Okay, last week alone, about 2,800 tons, which is almost 3,000. I'm sorry, 2,800 tons. So almost 3,000 tons left on the London market. So if we had another few days in SLV like we had last week, it could literally bankrupt the London market of silver. And then how much silver would be left? We come over to COMEX and look at how much they have left. Look how much future paper is sitting on top of that. So we're pretty close to squeezing the silver market. Pretty close to squeezing that silver market. And that's assuming all the numbers reported by the COMEX and all these ETFs is correct. We're pretty close to a silver squeeze. It's not far off. Now I want to take a moment to take a look at the COT report. Those of you who remember reading this report or looking at this report on my channel, it's a commitment of traders provided by the CFTC. This data is as of February 2nd, 2021, so early last week. Again, we always get the data about a week to 10 days behind. We're going to be looking at silver here as of February 2nd. And I want you to look down here. The swap dealers, 27.7% short. The producers, about 35% short. That is hedging their near-term silver production. You don't need this additional 27.7 to do a legitimate hedge against near-term silver production because you got it right here. The producer merchants do their own. So this is basically the gambling by the bullion banks for other clients and their house account, and they do use both clients and house account. But here's the really interesting change. The biggest 4 and 8% or biggest 4 and 8 traders short, biggest 4 traders short are 36.7 of the shorts, and the biggest 8 is 47.5. That's a huge amount of concentrated short positions, mostly by the bullion banks, some by the producers. An absolute tremendous amount of short paper on the COMEX, the U.S. market for silver. And that's basically is what's been keeping the price down. Silver's trading just over $27 today. They beat it all the way down into the 26s after it touched on 30. Remember last week, Monday's open a week ago, it touched on 30.01. They initiated this big paper short. I showed that in my last videos last week. I'm not going to go over it again today, but that brought the price down. But remember, the buying of silver has not stopped. People have continued buying silver to the tune in the last month of about 8% of all of the holdings have inflowed the last month. Okay, so basically, you know, the first week of January to the first week of February, 8% of all of the silver storage has been added in that 1 month alone. We're talking like all the silver storage, all aggregated over time in just 3 to 4 weeks after the beginning of the year. That is people saying we want silver. Now, it could be big sovereigns saying we need access to silver for the economy. It could be all these investors going into SLV and all these other ETFs. It could be a lot of other things, people trying to secure their silver for industrial use or for investment use, the two main uses, industrial investment and some jewelry as well, which I would argue is a type of investment, but it's broken out differently when we look at the demand on all of the reports. So all we need to do, and this is essentially the number I'm looking at. Ronan says, yeah, we have about 3,000 tons free left in the London market, which could be bankrupted, you know, in 2 to 3 days if we had another week in SLV like we had last week, whenever that's to happen. But I'm looking at this number. I'm looking at like this, what was it, 3,400 tons, 3,500 tons of silver. That to me is probably the free float number we're going to look at. And if we continue to have that much silver inflow through February and the first or second week of March, we basically could be out of free silver. And the only way that people are going to give up the silver that they're holding on to is if the price of silver rises substantially. Because remember, it's basic economic supply-demand equilibrium. So if at this price of $27 silver, there's this much inflow, that's net inflow, that's people telling you they believe silver is underpriced and they're hoarding it. To get that silver back out into the market, that price has to rise. That's essentially the equation. One more thing I wanted to show you, bar chart. This is the COT report for silver, but over time. So this is a week as of February 2nd. This is that data over time. And I want to show you the most important part of it is who is short. Now, it shows you the price here, but then this is the actual COT data. This is the positions, these two sets of lines down here. This is the aggregated, this is disaggregated, meaning they just break it out into more categories. The commercials are basically the producers and the swap dealers, and they're short this much. The producers, it makes sense. They're hedging their price risk. They take a short. That way the price falls, they can recover in the futures market. I argue that the swap dealers, which are the bullion banks, don't need to take this large short position you see here on this green line that I'm circling right here, because the producers have already done it. Look at this red. The producers have already hedged their short-term and even I would say medium-term risk in terms of silver production, because they are short. Let's see, they are short, the producers, 56,000 contracts of 5,000 ounce silver. That about covers all near-term production. The bullion banks don't need to do it unless they're gambling that the price of silver is going to come down, or unless you want to issue paper to keep the price of silver down. Maybe they're doing it for the managed money, this blue line, which is long, so that they can take physical delivery. Maybe the managed money is their clientele, And this is a way for the swap dealers to beat the price down so the managed money can go get it. Maybe the sovereigns are in there using the bullion banks to beat the price down so they can secure their physical inventory for their economy, for their economic growth. It could be a lot of things. We don't know. We don't have the transactional data. We don't have a breakdown into subcategories. We can only speculate, but it's clear that all of this short paper is keeping the price down, and we can tell that people are hoarding it. This number tells you people are hoarding it. They believe silver's underpriced, both from an industrial and investment perspective. That price long term has got to go up when we see these trends in this data, and I think that's what's going to happen. And ladies and gentlemen, it could take just 3 or 4 more days of the inflows we saw, like into SLV, to really bankrupt the market. Now, whether SLV takes on all that silver or not doesn't matter, because what that does is it puts a claim on silver, whether it be through SLV or through the COMEX futures or whatnot. And that is an effective run on silver, because that would be fractional reserve silver. If you only have so many ounces and you have all these contracts, whether they're derivative or not, that means somebody's going to be left standing when the music stops and there's not going to be a chair for them. And that means there's a shortage of silver. And if you saw that 4-week inflow off of Nick Laird's website of 124 million ounces, about, was it 3,500 tons? We have one more month like that. There is no silver available at this price. The price has to go up to pry that silver out of hands. Now, depending on how much of that silver is owned by the merchants who are using it to build stuff, governments who are using it to build their economy, how much is going to be allocated to the future, to the space economy. It would not surprise me if China and Russia and some longer term thinking governments who put together these 5, 10, 20-year plans and look really long term in the future are not taking advantage of this cheap silver market to take physical silver off and store it, because they got to build out their industrial economy. They got to build out their space economy. Okay. You need silver to get into space. So you need silver to put up satellites. You need silver to build industry. You need silver for iPhones, for all those things, for medicine. You name it, silver's in everything. And it's an irreplaceable metal. It can't be substituted by gold and everything because of its characteristics. Can't be substituted by copper, by zinc, by steel, by any of those things. So this is the update on silver. I think we're closer to a squeeze. A lot of people have said, is the whole Wall Street bets thing and all of that, did that cause a silver squeeze? Can you cause a silver squeeze? Who is responsible for that? At the end of the day, it's kind of a moot point. At the end of the day, what matters is we're now getting closer to where we're going to have an actual silver squeeze physical by the numbers. So how and why we get there doesn't really matter. It just matters we're almost there. So again, window closing to get your silver. Don't think you have a whole lot of time before we start to get that, at least the first stage of the moon shoot. And as I was telling subscribers last week, this was the first wave into the massive move into silver, that 124 million ounces you saw starting 2021. We're going to have another wave as the public gets more information on this, as you start to see it on Reuters more and Bloomberg. I saw another video on Bloomberg, how they were talking about how silver was stored in New York in safe underground vaults. Now you're starting to see this in mainstream media. As that second wave starts to build and people pile into that second wave, it's going to be a bigger wave than the first one. And it's not going to be $124 million ounces of silver in a month. It's going to be 200, 250, 300. And then we're going to find out how much silver is really liquid. And that's what's going to bid up the silver price long term. I think that's what's going to happen. So we're in maybe another wave from bankrupting all silver at this price. Now, it doesn't mean we won't have silver. We have about 900 million to a billion ounces of silver produced every year. So there's going to be more coming in. And at higher price, if it gets to $50 to $100, some people are going to let it go, especially investor demand are going to start letting it go. But as to where we land on the silver price, that's more medium to long-term factors, is how much silver we need for the growing economies and how much is really available versus how much derivative positions sit on that. Those two things really are going to tell us what the price of silver ultimately will be. I don't think there's any question it's going higher. It's going higher, it's going higher, it's going higher, it's going higher. How much higher? I don't even really care at this point. It's going to go way higher. It has to go higher. You look at the fundamentals, and now you look at the last month of trade, getting closer to bankrupting available silver stocks. We're seeing that start to happen. We're seeing that start to happen. We're getting a lot closer. And that's really what matters. It doesn't matter if Wall Street Bets cared about silver or not, but we do have a Wall Street Silver channel on Reddit if you want to go support that one. But it does matter the overall investment demand and the industrial demand. And so all of those things are only bullish for it. It doesn't matter whether they intended to be bullish or not, but all of the media, the Reddit, the inflows into SLV and all these other funds, that's what matters. It's going to continue, and it's going to keep continuing, and we're nowhere near the top of this thing. we're sitting somewhere near the bottom, because if you look at inflation adjusted price of silver, you're looking at maybe $1,000 silver if you go back on that 300-year chart I showed a couple of weeks ago. So those things to keep in mind. We're not there quite yet on the silver squeeze, but we're getting closer. That's some additional data for you. I want to bring this to you guys. I think it's very important. Stay tuned. In the next couple of days, we're going to have another company profile for you. I think you'll find very interesting. Till next time, guys, this is Rob King.